Hello property navigators. Today we'll be discussing some excellent areas in Southeast Queensland worth considering for investment within the $700,000 to $800,000 price range. We're focusing on two cities located within about a half-hour drive from Brisbane City. The areas we'll introduce today offer both strong imminent price growth potential and strong cash flow. Depending on your investment stage, you might prioritise a 3-bedroom, 1-bathroom property with a larger land content over a 4-bedroom, 2-bath on a smaller block, or vice versa. At the end of the video, I'll illustrate this with examples of property listings of different types of dwellings, demonstrating how each could work in various scenarios. I'll begin with an overview of two specific regions, then I'll narrow down into specific suburbs that we will recommend for you today. Let's get going. First up, we have Moreton Bay, a vibrant coastal region located just 25 kilometres north of Brisbane City and 40 kilometres south of the Sunshine Coast region. It's a beautiful area spanning picturesque waterways, islands and urban areas, offering a blend of natural beauty with the convenience of being so close to the capital city. With a current population of approximately 470,000 people, Moreton Bay is growing fast. By 2041, the population is projected to exceed 700,000 people, and the state government's Southeast Queensland regional plan notes the region will be required to deliver over 88,000 new homes. This growth is driven by the region's desirable lifestyle, employment opportunities, and expanding infrastructure, making it a key player in Queensland's future growth trajectory. Moreton Bay is set to benefit with billions of dollars being invested in local infrastructure projects. The Queensland Government has committed a ton of spend in the 23-24 budget as per the released regional action plans. As you can see, there's $925 million for infrastructure and capital works, a whopping $4.9 billion on health, which includes a redevelopment of Caboolture Hospital, $120 million on education to improve and upgrade schools, and the list goes on and on and on. And if you look at the total funding of these projects over the coming years and not just the 23-24 allocation, you get a good idea of the total amount being spent. And this is only state funding to the end of 2024, so it doesn't include federal or local government spend or private projects. So let's look at some of these other major infrastructure projects Moreton Bay has in its pipeline. Firstly, and a mammoth spend at $2.1 billion is works on the Gateway Motorway, North Brisbane to Moreton Bay. There's also $1.2 billion on the Bruce Highway, Pine Rivers to Doles Rocks Road interchange. There's $100 million for the Supernode battery energy storage systems, $150 million for the Moreton Bay Indoor Sports Centre for the 2032 Olympic Games. This new centre will provide a 9-court indoor sports centre with supporting change facilities, amenities and functional spaces. The community centre will be suitable for a range of indoor sport and community uses post-Olympics. There's $50 million for the Ningi Solar Farm, a new $22 million football precinct, home to the Women's Football Centre of Excellence at the South Pine Sports Complex in Brendale, and this one is nearing full completion. Nearly $48 million for the upgrade of Young's Crossing. Also, there's $200 million committed for Package 1 of the Doles Rocks Road to Anzac Avenue Bruce Highway upgrade. $125 million has been allocated for a knowledge and innovation hub at the Mill in Peachtree that is already home to the $150 million first stage of the University of Sunshine Coast Moreton Bay campus, Queensland's newest and most innovative full-service university campus. Construction is nearing completion on the $120 million Wamuran Irrigation Scheme project that provides consistent water supply for local farmers while managing wastewater demands of the growing population. The City of Moreton Bay is also committing $264 million in capital works from its $861 million 23-24 operating budget, which doesn't include $60 million that has been committed to deliver 5 city-shaping infrastructure and lifestyle projects. This one's really cool. An air taxi hub called Skyport's worth $175 million to manufacture and operate air taxis located at the Australian Advanced Manufacturing Centre of Excellence. There are more than just these projects I've highlighted here today, as this area is growing and it's growing fast. But I must mention that on top of these projects, the Moreton Bay Council has prepared the Regional Economic Development Strategy 2020 to 2041, which they are powering relentlessly towards. This is a blueprint for building a $40 billion economy with 16,000 new businesses and 100,000 new jobs by 2041, keeping the region on track to become one of Australia's top 10 regional innovation hubs. Moving on to the suburb we are going to profile exclusively for you guys today. Our pick is Bray Park. Bray Park is a suburb located, again, about 20 kilometres from Brisbane. Bray Park presents a solid investment opportunity with competitive property prices compared to Brisbane's inner suburbs. The median house price in Bray Park has risen from approximately $340,000 in 2014 to around $720,000 in 2024, reflecting an annual growth rate of about 10.4%. This high growth underscores the suburb's investment potential, especially when compared to Brisbane's median price of $924,000. In the decade between 2010 to 2020, the average growth rate was just 2.1%. Property prices only went from $375,000 to $243,000 in this time. If you got into the market in 2020, you would have been a very happy investor. But many investors can still capitalize on expected strong short-term growth. Subdued markets have been shown to perform more strongly in the following decade. I believe it was a great report done by Jeremy Shepherd from the highly reputable DSR School. As you can see in the graph on the screen, over the past 6 years, Bray Park reduced in population in 2018 to 2021 by 0.2 to 0.8%. However, that rebounded in 2022 with a plus 0.2% population increase, and then in 2023 with a massive 1.5% increase when the suburbs started heating back up. Bray Park's rental market is notably tight, with a vacancy rate of around 0.5%, indicating strong rental demand. This low vacancy rate is advantageous for investors, ensuring high occupancy rates. Advantageous for investors, ensuring high occupancy rates and stable rental income. The vacancy rate has been below 2% since November 2019 and has not risen above 1% since June 2020. This kind of vacancy rate will again ensure strong rental growth over the short to medium term. The stock level for Bray Park currently sits a fraction over 3 months, but again, there are properties under offer, which would reduce this to under 3 months. Inventory levels below 3 months means a market is under high demand pressure, and with no supply in sight, there is only one way prices will go, and that is up. Approximately 72% of properties in Bray Park are owner-occupied, while around 28% are rented. A suburb which has 70% of owner-occupiers is considered to be a desirable area to live. Bray Park is one such suburb. Investors in Bray Park can expect robust rental yields, currently averaging around 4.3% per annum. We estimate this to increase up to around 5.5% over the medium to long-term 3 to 5 year outlook, based on the assumption you purchased a house today. Bray Park presents a compelling investment opportunity for property investors seeking affordability, strong rental yields, and capital growth potential. The suburb's location within Moreton Bay allows easy access and proximity to both Brisbane and the Sunshine Coast, combined with reputable schools and a university campus nearby, making it an attractive destination for residents. Bray Park offers a stable and promising environment for both short and long-term rental income and long-term capital growth, making it what we believe an excellent choice for property investment. Secondly, today we have Redland City, or also known as the Redlands, a scenic coastal area located just 25 kilometres southeast of Brisbane City, and the smallest of the regions we have profiled. It's a beautiful area known for its 335 kilometres of coastline, 6 island communities, including North Stradbroke Island and Coochie-Mudlow Island in the Moreton Bay Natural Marine Park, and 12 mainland suburbs. The Redland City Council states it is home to almost 158,000 people, with a projected population of around just over 200,000 people by 2041. The state government suggests population growth of over 50,000 people by 2046, representing a total population of over 212,000. The updated state government's Southeast Queensland regional plan notes a proposal to increase housing stock in the Redlands by 31% over the next 2 decades to deliver over 20,000 new homes. For its size, the Redlands punches high and has a very healthy infrastructure project pipeline. It also has some really awesome visionary infrastructure projects for hosting the Olympics that may also go ahead. Now, this LGA, out of all 6 we have covered in this series, has its infrastructure spend nestled within the Brisbane and Redlands Regional Action Plan, so it doesn't have its own, so it's difficult to provide exact figures in terms of total committed budget, because it's blown out by Brisbane taking its lion's share. However, I've done all the research for you, so nonetheless, let's go and get through some of these projects and their allocated infrastructure spend. In regard to health, there's $45.1 million in 2023-24 out of a $137.1 million total spend for delivery of a range of enhancements to the Redlands Hospital site, and its portion for one out of the 7 satellite hospitals, the $78 million allocated for this. The Redlands Hospital is also getting $8 million in 23-24 out of a $150 million total spend for the replacement of the mental health facility. Capalaba State College is receiving $7.7 million in 23-24 out of a $12.8 million total spend to deliver a new hall facility. $21.7 million in 23-24 out of a $68 million total spend is to construct a new primary school in Redland Bay. More than $40 million is being invested in the Wellington Street Panorama Road upgrade, and $6.5 million will support major works at the intersection of Kidd Street and Serpentine Creek Road. The Redland City Council is committing about $134 million in capital works from its $434 million 23-24 operating budget. $150 million has been confirmed to build the Chandler Indoor Sports Centre for the 2032 Olympic Games at a cost of $150 million. The new indoor high-performance sports centre will feature 10 multiple sports courts and a 2,400 square metre gymnastics facility. After the Olympics, it will permanently host high-performance gymnastics programs and will be suitable for state, national and international events. Now let's quickly look at some of the visionary and quite cool future infrastructure that will transform the region's lifestyle. Kicking off, we have the Toondah Harbour Priority Development Area, a world-class harbourside mixed-use and marine transport precinct. With a $1.39 billion private capital investment secured, Toondah Harbour is projected to provide $2.33 billion of indirect benefits to the local economy and deliver $34.8 million estimated annual contribution to growth regional product. The development will include a marina, residential and hotel development, conservation areas and a high-quality public realm. Redland City Council is delivering a $250 million project to transform the area behind Capalaba Central Shopping Centre into the urban heart of Capalaba with a new library, customer service centre, arts centre and community hall. Then there's the $160 million Redlands Coast Regional Sports and Recreation Precinct. The precinct includes 13 touch fields and a dedicated clubhouse, 3 NRL fields and a dedicated clubhouse, a cycle precinct including criterium track, competition grade BMX track and a major pump track with a cycle clubhouse, and a regional play precinct including wet play, nature play and climbing structures. Associated with the precinct are major road and services upgrades and a recycled water supply. And lastly, the approximate $300 million Birkdale Community Precinct, an intergenerational community project set to be delivered to the Redlands coast over the next 20 years. This project will house construction of a $100 million Redland Whitewater Centre facility. Initially for the 2032 Olympic Games, part of this Whitewater Centre facility has $50 million of committed funding and will host the Olympic canoe slalom. Post-games, this venue is being positioned to be incorporated into a broader adventure sports precinct, providing both elite and community facilities. It also provides the opportunity for emergency services and swift water rescue personnel for state, national and Asia Pacific emergency services. So as you can see, what I've spoken about here collectively shows the direction of Redland City's growth trajectory. And there's some really cool future vision going on here. Moving on to the suburb profile exclusively for you guys today. Our pick is Alexandra Hills. Alexandra Hills is a suburb in Redland City about 21 kilometres from Brisbane. Alexandra Hills provides an appealing entry point for investors with competitive property prices compared to Brisbane. The median house price in Alex Hills has risen from approximately $400,000 in 2014 to around $790,000 in 2024, reflecting an average annual growth rate of about 7.8%. Compare that to the median house price being over $924,000 in Brisbane. In the decade between 2010 and 2020, the average growth rate was incredibly low at just 1.26%, where the property prices only went from $416,000 to $441,000. So whilst recent growth surges have been incredibly beneficial for this market, it underperformed for 10 years prior to the recent uptick, leaving the door open for further strong short-term growth. Alex Hills boasts an extremely tight rental market with a vacancy rate of around 0.2%, indicating strong rental demand. There was a high of 2.2% in December 2019, which is, by the way, still very good, as a circa 2% vacancy rate indicates a market that's undersupplied with rentals. Since January 2020, vacancy rates have stayed well below 1%. Under 1% is a heavily undersupplied rental market. If we were to look at the stock levels using the sales and listing data for the past month for houses, 49 properties were listed and 12 sales were achieved. Therefore, this suburb has approximately 4 months of supply. But a majority of these listings are under offer, so this number would be in fact considerably lower. We are being conservative here. However, combined with days on market under 20 days for the past 3 years and demand staying hot, well, it can be expected that prices will continue to push further ahead. Approximately 77% of properties in Alex Hills are owner-occupied, while around 23% are rented. This mix contributes to a well-maintained community and ensures continuous demand for rental properties. Investors in Alex Hills can expect strong rental yields, currently averaging around 4.4% per annum, and we estimate this to increase up to around 5.6% over the medium to long-term 3 to 5 year outlook, based on the assumption you would purchase a house today. Alex Hills presents a convincing investment opportunity for property investors seeking affordability, strong rental yields, and capital growth potential. The suburb's strategic location within Redland City, being so close to the lifestyle options that the Bay offers while being so close to Brisbane, gives residents the best of every world. As I mentioned at the start of this video, we picked these suburbs because we believe they'll perform very well by providing both strong imminent price growth potential with strong cash flow. While we can give you these tips, you need to figure out yourself what dwelling type you should purchase for your own circumstances. That could be either a 3-bedroom or 4-bedroom house in these markets. For example, let's assume you have a lower budget in the price range that allows you to buy a solid foundational property, let's say a basic 3-bedroom, 1-bath house on a good sized block. We found this past listing as a good example. Here is a 3-bedroom, 1-bathroom in Alexandra Hills on a 685 square metre block with drivable side access for a granny flat that sold for $705,000 just in March. 3-bed properties in the suburb are renting between $590 and $650 per week. So let's say we rent this at $620 per week. So that's producing a 4.57% yield. If you had a little more money to spend, here's a 4-bedroom, 2-bathroom house in Bray Park on a 602 square metre corner block with ample yard for a granny flat that sold for $650,000 in May. We know from looking on RP data, the majority of 4-bedroom, 2-bathroom houses on similar size blocks are renting for about $675 per week. So let's choose that as our reference. At $675 per week, that'll give us a yield of 4.68%. By purchasing either of these, and with the growth we are predicting from the work our data team has performed, you will achieve above average capital growth, especially considering these decent block sizes, as it is the land that appreciates in value. However, at this stage, you haven't maximized your cash flow due to your lower budget. Strategically, you can then work on improving cash flow at a later time. A little side note here, these LGAs are not as granny flat friendly as their other Southeast Queensland counterparts, Ipswich and Logan for example. More red tape and higher infrastructure charges, so ensure you do your due diligence on your council's planning scheme to see if a granny flat strategy is feasible. And if you want to ensure that you can put a granny flat in and use that strategy, give us a call, numbers down in the description. Let's say you can release some equity in years 2 to 3 to add a granny flat. By adding your granny flat and spending say $150,000 to $200,000 on that project, you could then rent that out from $330 to $450 per week, depending on your region. This should be carefully considered in your investment strategy, which will depend on where you are up to on your investment journey or what your portfolio needs. Now, if you really like the idea of using the granny flat strategy to have high yield from the very get-go, but only have a budget of $800,000, then check out this video here. We focus on regions and suburbs in the price range from $550,000 to $700,000. So if you pick up a $600,000 property and then use the granny flat strategy, you could be all in for around that $800,000 mark, but have an awesome yield from the very get-go. Until next time, happy property navigating.